Historically, a tricky month, October, proved not to be so this go-around, at least on the surface. And as you see, the Dow was the big winner for the month, up more than 4%. And for the Dow and the S&P, it was their seventh straight monthly gain. You don't see that all that often. The key for these numbers, more than half of the S&P 500's gain this month came from 5 stocks. Want to guess them? Amazon, Apple, Alphabet, Facebook, and Microsoft. And that might be a little worrisome to some investors. As for today, stocks held up despite a late-day incident in New York where a truck plowed into a crowded bike path, killing at least 8 people. It is being described as a terror attack. The Dow rose 28 points to 23,377. NASDAQ also added 28, and the S&P 500 tacked on 2.
Investors have just closed the books on what's historically the trickiest stretch of months for the stock market. But this year, the past 6 months have been pretty kind to shareholders. So what do the history books say about the months that lie ahead? Mike Santoli takes a look.
The stock market has made it through the toughest part of the calendar in fine shape. And if history is a worthy guide, this bodes pretty well for stocks through the end of the year. The 6 months from May through October represents the weaker half of the year on average. This is the basis for that popular but not entirely reliable Wall Street saying, sell in May and go away. Since the start of May this year, the benchmark S&P 500 index is up more than 7%. And from August through October, typically a treacherous period for stocks, the index has advanced more than 4%, with very little of the volatility that traders had braced for. This upbeat performance has much to do with a broad pickup in the global economy and brisk corporate profit growth. But coming in a typically challenging time of year, the gains are leading some analysts to wonder if the market has pulled forward some of the potential upside from the often strong final months of the year. However, past results say not necessarily the case.
Take 100 a quarter.
In years since 1950, when the May through October period saw stocks climb at least 5%, the market continued higher over the next 2 and 6 months, more than 3/4 of the time. And the gains over each period were above the long-term average. Needless to say, this pattern guarantees nothing about the future. And the last time we saw a similarly strong rally in stocks from May to October in 2014, the subsequent gains were unimpressive, and the market was actually lower 16 months later. Note, too, that the current market is now on a record-long streak of nearly a year without even a 3% dip in the broad indexes, an extraordinarily calm rally that can't last forever. Still, on balance, markets that are strong enough to defy hostile seasonal trends enjoy pretty good odds of remaining strong, at least for several months longer. For Nightly Business Report, I'm Mike Santoli at the New York Stock Exchange.